Let's go ahead and once again continue with our customer centricity mindset that we've been following since morning. So you've heard topics relating to customer first and product second. We've heard about topics related to how to get the customer to have his cart full. Now, the next one that we are going to be divulging into is topic as changing lanes, understanding shifting customer preferences in lending. To moderate this session, we have Mr. Mayur Modi, who's the co-founder Moneyboxx with us. And on the panel, we have Mr. Yashoraj Tyagi, member of FACE and Chief Technology Officer and Chief Business Officer for CASHe. Mr. Akshay Sarma, who is the Chief Financial Officer, Axio, and Mr. Rajneesh Arora, co-founder and Chief Product and Strategy Officer at Spice Money. Could I request the panelist and the moderator to kindly please take on the stage? Welcome in. And while they join us onto the stage, audience, if you could welcome them with a round of applause, highly appreciate that. Thank you very much. So, Mayur, the stage is yours. Please begin whenever you're ready. Thank you.
Thank you so much.
You're welcome. Thank you.
Should we start? Thank you so much. Thank you so much. I know it's just a session after lunch, so it's difficult for everybody to be awake, but we'll try and make this session as interactive as possible, and hopefully we can also take some questions at the end of this session. So just to introduce the panel and myself, and then maybe we can start getting straight into the panel discussion. Myself, I am Mayur Modi. I'm part of Moneyboxx Finance. I co-founded that in 2018. We are a small business loan NBFC catering to tier 3, tier 4. So we are a digital platform, but we also have touch points in those locations that we operate in order to deliver our products and services. So today we have around 36 centers spread across 5 states. We cater to more than 20,000 customers, live customers as of today, and our ticket sizes range between 1.5 lakh rupees to 7 lakh rupees. So this is what we do. We have an excellent panel today with us, and it's a very diverse panel. I'm very excited to have them on stage. So let me just introduce the panel. So we have Rajneesh Arora, co-founder, head of product and strategy, Spice Money. On the extreme left, we also have Akshay Sarma. He is CFO Axio, now rebranded as Axio, but very well known as Capital Float in this earlier avatar. And we also have Yashoraj Tyagi. He is the Chief Technology Officer and Chief Business Officer for CASHe. So why don't we just have a very quick round of introduction, Rajneesh, and say what is why does Spice Money do? What is it? What is it that exactly is the product and services that you offer? And then maybe we can start delving into questions.
Thanks. Am I audible?
A little louder.
Yeah. Thanks, Mayur. At Spice Money is a rural fintech, and by rural we mean that we serve customers in blocks and villages, right? So there are 700 district headquarters in the country, 5,000 blocks, in excess of 6 lakh villages. So we basically serve customers in blocks and villages. We facilitate banking and payment transactions for customers in rural. In excess of 20 million customers transact on a platform on every month, on a monthly basis. And we do this through a network of merchants who are engaged with us on the Spice Money platform. We have 1 million merchant points across these blocks and villages who serve these 20 million customers on a monthly basis. And we've been facilitating in excess of about 70 million transactions for these 20 million customers. So what we see in rural is actually, it's a huge opportunity and a huge gap. right? And I think when it comes to lending, we see a huge opportunity. At the same time, I think a lot of work needs to be done, by the industry, especially by the fintech players. Banks have been there and they've been doing a good job, whatever the business model enables them to. But I think a lot of collaborative opportunities by the fintechs to really bring financial inclusion in the country, and that's our goal. Thank you.
Thank you, Rajneesh. Akshay.
Hi, everybody. I'm Akshay. I'm the CFO of Axio, which was earlier known as Capital Float. I've been with them for about 7 years now, primarily building their entire liabilities from grounds up, co-lending from 2015. And we are predominantly today an online checkout finance player with tie-ups with players like Amazon, Make My Trip, Razorpay, and a couple of other exciting partnerships in the near future.
Thank you so much. You want to introduce yourself?
Yeah. Thanks for the introduction, first of all. I'm Yashoraj. I am the CTO and CBO at CASHe. We are a credit-led full-stack financial services platform. Credit-led being that we have done credit for the last 6 years of our existence. Of it, the last 5 years, I was a part of the company. In terms of credit, we offer the full range of credit platforms, whether it be personal loans, short-term, medium-term, buy now, pay later products, credit lines, everything that our customer base would need. And we've also evolved into offering wealth and insurance products to our entire customer base. So that's why we see ourselves as a full-stack financial services platform today.
Thank you, Yashoraj. So we have Rajneesh, who caters to the rural segment, tier 4, tier 5, tier 3 of the world, which is more like the real Bharat that we can say. And we have Akshay and Yashoraj, who completely kind of cater to tier 1. I think you still cater to more like mid-tier, tier 2s, but yours is purely tier 1 to a 1, 2, 3. So we have a very diverse kind of customer base that we're going to talk about. So why don't we delve straight into questions in terms of what I wanted to understand. So the topic, as we know, it's understanding the customers, shifting preferences in lending. And I think that will also be a lot driven by how customers are buying some of these products online through multiple channels that we see. And it has to be driven a lot by how some of this, the new Gen Z, millennials are kind of coming on these platforms and buying. So from your perspective, Rajneesh, how difficult it is to cater to a tier 3, tier 4 in terms of delivering some of your products and services, especially when it comes to lending. How difficult or easy is it to bring them back on the platform and kind of deliver this online?
Sure. So, if we talk about rural customers in general, so I think what has happened is that if I talk about the pre-pandemic era, right, digital was a very, it was a completely new word for rural, okay? But what has happened during pandemic is that, there has been a huge penetration of smartphones in rural. So anybody who can afford, typically every household at least now in rural also has a smartphone, right? And the pace of penetration has significantly increased in the last 2 years. And if you look at, the use cases of a smartphone, of course, they start with YouTube and WhatsApp. But again, what has happened during pandemic is that people have seen, they were forced by the need. And they've seen that how swiftly digital payments can actually enable convenience for them, right? So there is a lot of, awareness and a lot of intent now to go digital. If you talk about aspiration, right, you take a rural youth, the rural youth wants to the rural youth aspires the same thing that a Gen Z that we talk about in urban, right? So the aspiration, there is no gap, right? They want to do online shopping, they want to, in fact, people in rural and villages go to their nearest town to a friend so that they can order a Zomato and eat, right? So that's the level of aspiration, right? And I think that's where it has started. And now, people are demanding that when it comes to not only payments, but even when it comes to taking loan, why can't why can't a rural youth not do buy now, pay later, right? And that's coming from the aspiration side, right? And is there a gap? Yes, there is a huge gap because there aren't enough players who actually even looked at the kind of opportunity that is sitting there in rural, right? So I think this is the change that has happened and very fast-paced change in the last 2-3 years. And now I think it is up to players like us to actually tailor-make the products, the processes, the digital journeys which are more suited to rural, right? So while the aspiration is there, exactly the same product cannot work. Case and example being, I think we all believe that UPI is the largest digital payment product in the country. I think without doubt, that's what we all believe. But actually the fact is that the largest digital payment product is Aadhaar-enabled payment services, right? It's something which is totally, I would say, we are blind to this product because we living in urban, we've never heard about this product, we've never seen people transacting using this product. 34 crore customers, 340 million customers in the last financial year transacted using Aadhaar-enabled payment service. And it's a very simple product. You bring your Aadhaar number, you put your finger on a biometric device, and your transaction gets approved, and the money moves from your bank account to the merchant's bank account, right? 340 million people used. The point that I'm making is that the kind of products that we need to create for rural have to be thought about grounds up. And then and only then can this gap convert into a real opportunity.
That's very apt. Akshay, if you were to take the same question in a pandemic, pre-pandemic, because world is divided now between pre-pandemic and post-pandemic. So from your offerings, has anything changed what you were doing in terms of customer journey or onboarding pre-pandemic, or you're seeing a lot of acceleration in terms of deeper into some of these markets where typically where you were present in tier 2s and tier 1s, and now you're seeing a large number of tier 3 also coming on board and doing some of these offerings?
Yeah, I mean, definitely, right? If you split the world in pre-pandemic and post-pandemic, I think post-pandemic world loves the online experience, right? I think the 3 months when we all sat at home and did the tali clapping and all that, people loved Amazon, they loved Flipkart, they literally went on and started shopping and they haven't stopped. So to your point, people have absolutely gotten hooked to the convenience of online shopping, right? Which is what we saw both from growth, customer acquisition, disbursals, as well as geographical penetration, right? So we were predominantly a tier 1 player pre-pandemic, right? The metros, as you would expect, with a south bias, if I may add so, because Amazon, Flipkart, it's a very weird split, but you get to see it. And then when the pandemic happened, the whole country kind of exploded, right? Everyone was using it. We obviously were very careful in how we were underwriting at the time because we were like, we don't know what the job seems like, etc. 2 months from today. But there was a definite shift. And what we are seeing is, I think people are hooked onto it, right? They're enjoying this more. They get trusting it more. India, in general, is a low trust country, right? So they liked going to the kirana store and buying it because you don't know Amazon mein, powder aayega ki dal aayega. So you're worried about these things, which I think the pandemic forced them to do it because there was nobody next door. And now they're like, hey, I can just order this, go to work, and my watchman will keep it, right? So we saw an absolute explosion, and we're continuing to see that kind of growth, right? So split it up into 2 for us at Capital Float or at Axio now. We look at convenience. There's an entire TG that uses this product because it's convenient, right? There's no OTP, CVV, you just hit one-click checkout. And then there's affordability. Now, this is for people who want to buy something a little bit more expensive. You can break it down into EMIs and make the payment. And the use cases for both are increasing quite drastically post the pandemic.
Interesting. Yashoraj, you are in a very unique position because you are the CTO as well as the chief business officer. So you get to kind of see both sides on the demand side and then to kind of develop technology stack. So from your perspective, pre-pandemic, post-pandemic, was there a redesign of the technology stack, or you just had to refine some of these finer aspects in terms of vertically integrating some of these technologies into the products and services that you continue to offer?
No, thanks a lot for that question. I think it's a great one, and I'll add to what my peers Rajneesh and Akshay have already mentioned. Um, that what essentially happened is that while you'll have different levels of impact in terms of the offline to online shift that happened in a rural area vis-a-vis a tier 1 metro, but I think it's a wrong assumption that a lot of people have that tier 1 or metro was largely already online, because it wasn't. Like, there was this big section that was, but there was a huge amount of upside to it, and there still is. What happened in the pandemic is that there was this big section of the population that still consumed financial services largely in an offline fashion, because not because of digital savviness or smartphone penetration, but also largely because of trust issues. People did not trust digital platforms to be able to offer them same services on an everyday basis, and that's why they never use them. But the simple act of not being able to go to your closest bank branch in those 3 months, and also the extended period of time after that, forced the same people to be able to also at least try and experiment with these so-called only digital platforms, which included the likes of a lot of us. And that is why we saw a lot of explosion in customer traffic coming in, which was a big upside, because then you are sort of, obviously from a growth perspective, it's great if you talk the business aspect of it, but then from a technology / product / user experience perspective, you are having a lot more customers coming in now that are not used to using digital platforms, unlike this whole other set of people that you are already catering to. And now you have to design for them. You have to make sure that they are as comfortable and have as much trust in your platform as anybody else. And that is where the redesigning, refining of not just the product and the UX, but also of processes happen, right? So that you can give people the relevant amount of comfort and sort of like still be able to cater to that mass without then you having like a one-size-fits-all policy. So I think that was sort of one of the other impacts that COVID had, if I have to answer it from a business and tech perspective. So.
Thank you so much. Thank you so much. That's wonderful. So, Rajneesh, just to come back to you. So we always know that, because rural population is more than 50% of the overall population, so there has to be a demand, which is always there. The challenge that most of the lenders always face is in terms of credit. How do you underwrite these customers, that too digitally, because you have to, that's the major challenge, or else the cost of acquisition, the cost of underwriting goes up. So from your perspective, being a rural fintech, so how are you addressing some of these issues, challenges in terms of accessing credit, underwriting challenges of some of these customers? How do you address that from your platform?
Sure. So just to give an example, so I think one of the things that we did in lending was to first, kind of fulfill the needs of our own merchant partners, right? So there are 1 million merchant partners. They engage with us digitally almost every day. They do transactions on our platform. And the fact is that they have, most of them have never been into the formal finance, journey, right? So therefore, they don't have credit scores. So the typical underwriting models most often will fail, right? So which basically means that you have to work on, alternate underwriting models. So that is on the underwriting. So what we did was basically use the data, the data that we had about the merchant, right? Because we know them well digitally, right? Because they're engaged with us digitally. So that's what we did on the underwriting side. But I think more than the underwriting, even catering to people who now have, bureau records. For example, a lot of people in rural have taken microfinance loans, have moved on digitally, but they continue to be going back to the microfinance way of, sourcing loans and not progress to the other loans, right? And I think that is where there is a gap of product as well, right? So for example, again, one of our merchants, so typically in a rural you have multi-category merchants, right? It's not like it's a kirana shop to sirf grocery bech raha hai. Wo grocery bhi bechega, he'll sell stationery also. He'll do a bit of this work also, helping customers do their banking transactions, earn money there. So it's typically multi-category because that's the only way it can become viable, right? That merchant, if he's funded another 25 to 50,000 rupees, is able to add one or two more categories into his shop and therefore increase his earnings, right? The problem statement now is that one, of course, the traditional banking and NBFC ecosystem cannot serve because the cost of acquisition is unviable, right? To give a loan for 50,000 rupees and doing that acquisition. So, so I think that cannot work. So it has to be an alternate underwriting, but also more importantly, what we saw is that people who manage to get loans from the formal sector, right? So there are also government schemes which start you funding at 50,000 rupees, right? Like Mudra scheme. And they're available, right? They're available for people to, of that TG. But the process of accessing them is so difficult, point one. Second, people who took loans, right? the cash flow of these merchants does not allow them that at the end of the month when the EMI is due, they can actually collate that much money on that day so that their bank account is dipped, right? So people are okay paying 200 rupees a day, but they cannot pay 5,000 rupees EMI, right? Their cash flow basically works on a daily basis, right? So what we did was we said, okay, if people can comfortable paying daily, we created the product which was basically a daily repayment product, right? More from a facilitation perspective, right? So of course, because we had the data and we had the KYC, it was a one-click kind of a loan approval, right? And dispersal within 24 hours. So I think there are these elements of underwriting, digital journey, and the product per se. I think all of them have to be reimagined, right? Similarly, now when we talk about customers beyond our own merchants, right, who are not digitally engaged with us, I think the KYC is a big problem statement, right? Because can you expect them to do video KYC? I think very difficult, right? It takes about 20, 30 minutes. Seeking assistance, especially women, are they going to come on camera and all that? So there are a lot of these inhibitions and challenges. And there we believe the Aadhaar stack really comes into play beautifully, right? So for example, all our 1 million merchants are equipped with a biometric Aadhaar device. That's how they serve their customers for banking transactions. So that can be used to do the basic KYC at a merchant point, right? So that solves a big pain point of just getting onboarded. The second, while a lot of customers have come on the smartphones, and the point that Yashoraj made that, there is still that inhibition that hoga kya, will I fill all of this data and will I get a loan, right? Or I have tons of questions in my mind, right? So you need someone to answer them. And typically in rural, word of mouth works, right? People trust people far, far more than any brand that they trust, right? So, talking about financial services, the only brands that they would trust is either LIC on the saving side, and on the banking side, typically those large PSU banks. After that, they need to trust the person whom they are transacting with, not anything that has been shown to them on a screen. So I think that's where this model, this Bridgetal model or Phygital model of somebody who's your own trusted person within the community. This merchant has been there in the village for 20 years, you can trust him. And this merchant is very digitally savvy and he's fully digitally connected, right? I think this kind of a model definitely has a lot of potential to bridge this whole gap before a customer in rural can, open up a smartphone and in 2 clicks really get access to a loan. So I think this is the journey that probably could be the journey to final digital inclusion.
Yeah. Akshay, following up from what Rajneesh mentioned, I think very aptly mentioned about the challenges of kind of bringing rural population onto the platform and then assessing them. So in your case, is it a little easier than what it is for a tier 4, 5 or 3, or you also feel a lot of challenges because you also deal with multiple set of customers from individuals, buy now, pay later, SMEs of the world. So is it very different in terms of assessing them?
I don't think it's predominantly difficult or different. I think the challenges are more or less similar. We just face it differently. So I think every loan in the world, there's just 2 things you're trying to figure: ability to repay and intention to repay, right? Now, ability, largely everyone solved because you're looking at bank statements, pay slips, etc. When you're trying to do in the online world, small ticket underwriting, that's where this becomes really tricky, is you cannot gauge both, right? So you're trying here to solve a problem which ideally should have never existed, but yet here we are because consumers want this particular product. So we've had the luxury of building different underwriting models because we acquired this app called Walnut back in 2018, which was a PFM app that was scraping SMSs. So it allowed us to kind of build a personalized P&L for almost 10 million users in India. And post-acquisition, when they applied for credit, we kind of got their bureau. So what we've been able to build is an income estimator model today where I can just pull your bureau and put you in a bucket of ballpark what your income must be to have this kind of a bureau profile. So that now allows us to say, hey, you know what? He has all these obligations. His income must be X. I can now take an ballpark guess कि यार इतना तो होगा तो I can give him itna.
That's more like reverse engineering the bureau
It is reverse engineering it, right? And that's what data has to give you at the end of the day. Because, you know, you want to hold the nose. ऐसे कि ऐसे, it doesn't matter. You just have to find a way to do it. And when you're not able to solve this problem in a straightforward manner, you just try to get creative, right? Because for us, it was important to get speed on this and accuracy, right? It wasn't easy. We definitely didn't get it right the first couple of years when we started. It takes time. So you start small, figure it out, grow, scale. You know, it's been 4 years since the acquisitions, 4 years of customer underwriting, been a lot of customers, a lot of folks who got it wrong. So there's enough data today to stand back and say, I know how this works, right? So yeah, we look good today, but we didn't for a while. So it's a journey, and lending is one of those things, right? You've got to ride that roller coaster.
So you have to learn on the way. There is no off-the-shelf model that you can deploy. So just picking up from there, I think the predictive analysis is the in thing right now because everybody is trying to predict how this customer is going to behave 1 year, 2 year down the line, and whether I should be able to kind of give a loan to him or not, or onboard him or not. So from your perspective, does predictive analysis help in terms of kind of mapping the customer journey better, the customer experience better, because you actually know what is he asking for or what he might be asking for, and then kind of provide solutions and services? And how do you, have you made some investments in technology to kind of to cater to this kind of a segment?
Yeah. So thanks again for that question. I think Akshay and Rajneesh again covered it very well. I'll add in terms of what has been our experience and our journey on that. As CASHe, we have our own fully owned NBFC on which we do all the lending ops. But if you fully see our DNA, we essentially are a technology company that happens to do lending. So technology investment has been the backbone and cornerstone of whatever we have done. Now, back when we started in 2016, the idea was that we want to push the envelope in financial inclusion by developing a completely alternate creditworthiness evaluation system for which we developed, fine-tuned, scaled over the next 2 to 3 years, now hold a patent for, which we call as a social loan quotient. So we are saying that this social loan quotient, or the SLQ, is essentially what, in our scheme of things, gives the customer's creditworthiness in our scope of operations. And essentially what we're doing, we're looking at all sorts of alternate data of people from all sorts of data sets that we can access with explicit customer consent. We are saying that does everyday buying habits, spending habits, everyday behavior of people in terms of what are they doing in terms of where they're shopping and stuff like that, as well as where do they work, where do they stay, how much do they earn, what job stability, education background, residential background, all of that information of thousands of data points and then combined together to give you that score. So predictive analytics is right there, right from the start. This is where our customer journey starts, by giving those customers that SLQ score. Now, what does happen is that because you have a creditworthiness rating on a customer in terms of what we believe and fully trust is a reliable rating, because we have done that underwriting over and over again, as what Akshay just mentioned in his scheme of things. We are now able to design various kind of journeys around different customer aspects. So, just a case in point, while we have a typical app journey, we have an embedded journey on platforms like, say, a Google Pay or an Airtel Payments Bank. We also recently, last month, launched a journey that's worked out exceptionally well for us, which is you can just text hi on WhatsApp with a name and we'll give you credit. Because everything happens in the background after that. KYC, underwriting, everything. It's just because we are able to do predictive analytics on the fly that we are giving customers credit on chat, right? And that's just the customer's name happening there. So that is the kind of fine tuning and creating like industry first journeys that you can essentially do if you've got predictive analytics in place. And obviously it's an investment, it is a journey as Akshay mentioned, but once you get it right, you get it right for a long time. So that's how I would talk about that.
That's very interesting when he says that on WhatsApp, you say hi and you know exactly what are you going to get in terms of credit. I think that's an amazing, and by the way, CASHe is positive in terms of profitable, right? So the myth that, fintechs cannot be profitable, I think Spice Money is also profitable, if I'm not wrong. So we have 4 fintechs sitting here, at least, so am I. Hopefully this year we'll be profitable, but at least 50% of the panelists here are profitable. So that myth.
Someone has to burn money somewhere. Let me burn it.
Interesting. Yashoraj, just a follow-up question from that. There's this whole thing about metaverse. Everybody wants to be there. Everybody wants to kind of, experience. So from your perspective, do you think the metaverse world is going to enhance the customer experience in terms of understanding some of the products and services that any entity has to offer? Or is it a dream world that somebody is building out there?
So while I would begin by saying that it is obviously tangential to what we do at this point of time, but from a customer acquisition perspective, we've thought of wacky ideas like running ads in the metaverse, just trying to get the relevant sort of customers coming in there. But if you talk about like Web3 and metaverse and finance applications on the blockchain outside of crypto, I think we're still very early there. I was just talking to somebody out there, and we spoke about how now there have been some genuine applications in terms of genuine applications of traditional financial services now being offered on Web3 platforms are coming up, and like people are using that. But I think that it's very early from not just a tech perspective, which I think we're there, but very early from a trust perspective. That first we have to solve for giving access to traditional financial services in sort of a Web 2 way to a larger and larger chunk of customers, because before we can think of decentralizing them as of this point of time. But obviously it's important to make the relevant kind of investments in technology, research, as well as from a growth equity point of view, so that those companies keep researching, keep building, so that in the next 5-10 years when we are at the stage where we can actually offer these services at scale and the level of penetration is there, I think it'll grow up. So that's sort of would be my take on that.
Okay, interesting. Keeping cognizant of the time, we have another 4 minutes. Do we get to take audience questions? If anybody has any question for our panelists, we'll be more than happy to take a couple of questions.
Good afternoon all. My name is Pankaj Jharia. Sir, I have 2 questions. One is that there are many fake applications on Google Store, especially related with loan. So generally, actually, I think that they ask for Aadhaar card and other details, and later on they said that you are not eligible for loan. And I think this issue somewhere damaging the trust of original platform, P2P lending platform and other fintech platform. So what you expect that, what kind of measures should government take to resolve these kinds of issues? The second one is that, sir, recently I have read somewhere in news that one South Indian girls took loan through fintech platform, and later on the recovery agents mentally harass them to recover the amount that later on she committed suicide. So this kind of
So
issue,
we got your question. I think we'll let the panelists
sir.
answer. So you want to take that, Yashoraj, or
Sure,
Akshay?
I'll take that, absolutely. Yeah. So, and it was definitely a very sad incident that you mentioned about. So a couple of things on that. I think that in the last few months, if not the last quarter, the regulator and the government have been very, very proactive in making a clear distinction between what is regulated and what is not regulated, what counts as a regulated entity versus what counts just as a platform, offering financial services in collaboration with regulated entity. And Akshay and I were just chatting backstage before this discussion that I think that's a boon for the industry overall, because if there's a clear distinction out there, if that this is a regulated entity offering you the relevant financial services, I think a lot of these problems get solved for, because as regulated players, there are simply a ton of things that we can't absolutely do, because the regulator would be at a doorstep if they even have an inkling of any RE doing anything closely on the lines of what a lot of non-regulated entities are doing. And as this distinction becomes more evident, I see this downstreaming that into a lot of things like, say, the kind of apps on Google Play Store. Like if you read the news of yesterday, in fact, it said that a lot of apps were being taken down from there that were not regulated and were sort of fake in nature. And I think that it's only a matter of time where this becomes a sort of a very clear distinction. It was just that not a lot of people were using financial services apps till 2 years back, so there is not a lot of noise around there, but there is now, and I think that it will be clear very soon.
So Akshay, you want to?
Yeah, just very quickly. I think, broadly, we've been in touch with the RBI for, the last 2 years, largely around this, because we were seeing a lot of noise by non-regulated entities. And I think one of the things we suggested, like, on the Play Store, have a verification for registered or regulated entities, because there's no reason for me not to deliver a better experience because there are a bunch of guys doing nonsense on the Play Store, right? So they're cognizant of it. In fact, Google recently asked us for our RBI registration certificate, which means that they're moving in that direction, saying that, hey, if you're offering a loan, give me your registration certificate that you're regulated, or give me a letter with the partners you're working on so I can show their name on. Because you as the borrower have to know who is lending money to you. An app doesn't lend you money, right? So I think that is very, very important to come out. And, like everything in life, it's an evolution, right? We'll get 20 things wrong, but we'll get it right the 21st time, right? So unfortunately, when it comes to lending, there's money involved, and you have very unfortunate instances like this. But the hope is that, you get to the other side rather quickly.
So maybe we have time for one more question, please. One.
Yeah, so can you please elaborate on the alternate data, what kind of alternate data sources you use, how is the data quality and the coverage? Do you get a good coverage for the applicants who apply for a loan?
Do you want the VC answer or do you want the real answer?
I want the real answer.
No, look, I think there is a ton of alternative data out there, right? Majority of them won't really tell you on day one if someone's a good borrower or a bad borrower. I'll let the other gentleman take it for them. It takes time, because you need to read this data prolonged period of time, get it wrong 100 times, 101st time ummeed dikhega, shayad kuch hai, who knows, but you figure it out, right? Which is one thing. Lending is one of those things where you stick to the basics. Look, I was just discussing with a couple of folks, this is a very old profession. It's not new. The delivery of it is changing, the underwriting isn't. I still need to know, are you over-levered? Can you repay a loan? What your salary is? The core of lending does not change. Sure, different data points give me different things. Like, you've cracked WhatsApp, which is awesome. I don't know how you've done it, but kudos to you. But there's something that's giving him a proxy from there, right? So, which is great. So, it'll take time. I don't think they cracked that overnight. They would have taken their own time to actually get there. So, alternative sources are great, but I wouldn't bet the house on it on day one, right? If with time you've managed to do it, sure. And that could be anything, right? Geolocation pings, the phone you're using, which version, which time, what time of the day are you making an application, all of this matters. Like, I can prove to you applications made between 2 a.m. and 4 a.m., 95% are fraudulent transactions. Does that mean 5% are genuine customers, you reject them? No. But it's a data point that you can potentially use somewhere down the line.
I'll also quickly add to that, mostly because my personal background comes from behavioral credit scoring itself. I would just say to Akshay's point, which he very well highlighted, that obviously we are differentiating between intent to repay and ability to repay. Ability comes from very traditional indicators like over leverage as per bureau trade lines, your bank statements that you pick up and all that kind of stuff. Intent is where we are doing all the innovation for. And if you're collecting 1,000, 10,000 or 20,000 data points. What needs to be very clear to everybody in the system, if you're creating something like that, that every single data point over there does not give you an indication by itself on a customer's creditworthiness. Like I've had enough and more conversations with people asking me that, oh hey, like how does the fact that I use Instagram tell me anything about whether I'll default on a loan or not? It does not, but it is the way we are approaching credit scoring is that you're combining everything together to actually understand who the customer is, right? So the fact that he uses Instagram tells one thing about other 10,000 things that I would want to know on the customer. Now the data sets that you actually access the data from can obviously, to your point, have various levels of noise to it, right? That depends on what data are you relying on. If you're relying on customer declared input, obviously there's been a lot of noise around that, and you have to sort of bake that in the model as well, or whatever models you create. But if there is data sets that you're accessing with customer consent about mobile metadata, for example, there will obviously be sacrosanct data as is that you're capturing and sort of feeding into your models and getting result from. But all of that is going to be finally an exercise in terms of multiple iterations, figuring out where you went wrong and correcting that and getting a final big model in place.
So I think it's flashing red again and again, and he's indicating to us that our time's up. With this, I think we come to the end of the session. But just to sum it up, I think the anticipating customer behavior and changes is a difficult task. But I think with the advent of some of these technologies, data, AI, ML, I think at least we are in a better position to kind of gauge some of these changing habits and preferences. And I think it will evolve over a period of time. And as we kind of understand more about the preferences, we'll be able to deliver more better products and services and customer experiences. With this, I would like to thank so much Rajneesh, Akshay, and Yashoraj. Thank you so much for such an informative session. Let's give a big hand of applause for them. Thank you so much. Thank you.
Thanks for having us.
Thank you. Thank you very much. Definitely a very, very informative session there by our panelists there.